Good morning, Jim Barrett from RJL Futures. Tuesday morning, September 4th. Hope everyone had a very relaxing Labor Day weekend. Coming in today, notes and bonds slightly lower, slightly off last week's highs. We're basically in the midpoint of a big picture range, of a 3-month range. Europeans a little bit back in the news, back from vacation, back from the big August off, and you know, I mean, some issues there. The issues there to be resolved over the course of the month, possibly, is confusing. The mix of political pressure, the mix of central bankers, the risk of the German judicial system ruling on issues there, make it a very, very tough thing to game. Anyways, Draghi is talking about focusing on short-term, under 3-year, supporting under 3-year notes for Italy, for Spain. In this way, he gets around the restriction that's in place of the ECB not financing governments if he sticks to the intermediate to the shorter term instruments. You know, I mean, but the market looks at this as roughly supportive of equities, and it's why European equities in general are well off lows, well off the July lows, and seemingly stable on this particular bounce. Now, that really didn't inhibit it, as you know, the U.S. notes and bonds from recovering quite a bit. And so, I mean, there's a little dilemma, which group is right here about gaming the near-term future. Thursday, there's another ECB meeting. They cut the rates down to 0.75, a record low. The last meeting, there's still room to bring it down. Remember, we're at 0.25. However, inflation had kicked up a little bit, so that's sort of unlikely. I think the focus will remain on the judicial system in Germany ruling on these ECB bond buys, and how, again, that the mix between politics and central bankers ends up going. I mean, the German public and a lot of German politicians are still dead set against ECB, going ahead and buying these bonds. Anyways, the big news in the U.S. will be at Friday's unemployment number. Last month we did a little better. I mean, the U.S. economy obviously doing a little better, housing a little better. There was an article by a ex-Clinton era politician, Altman, I believe is his name, in the Financial Times, that got kind of a big stir about how the U.S. is doing better because housing seemingly stabilized a bit, oil and gas. And he's optimistic that some kind of bargain will be reached post-election about spending and taxes here in the U.S. Now, all those things would undermine notes and bonds at these levels, at these drastically low multi-year or all-time low levels that we find ourselves. So you got to keep all that in the back of your mind too. I can reach at 800-500-2461 to discuss any futures market. Please feel free to call. Remember, there's a risk of loss in futures trading. Not for everybody. Thank you.